Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist of 𝗧𝗴𝗀𝗀. Welcome to my morning review. Today, we're going to talk about the week outlook, and we're going to talk about the biggest threats and opportunities in the market. Now, as you can see here, the market's not going to open up for another 2 hours and 15 minutes. I'm an early bird. I want to do this nice and early to get you going so you could see this video before the market opens and we can formulate a strategy, a game plan together to take advantage of at the same time. So the markets are opening down. The Nasdaq is down quite a bit. The Dow's down only 100 points, but the value is 34,000. The Nasdaq is down 100 points and the value is only 14,000. So the Nasdaq is down quite a bit overnight. Now, I'm not expecting too much from the market today because the bond market is closed. Columbus Day. I didn't even know we celebrate Columbus Day anymore. I thought we stopped, but I guess the bond market still does. Remember, the stock market gets its directional bias from the bond market. So if the bond market is closed, that means the stock market's going to be very choppy, random, and not exhibit a lot of directional bias. So we may see a lot of volatility, but don't expect a lot of directional volatility. That means a lot of back and forth. There's just not a lot of data right now with the bond market being closed to generate a lot of directional bias. And if I was managing money professionally, I would stay out of the market, which I believe a lot of funds will do today. This week is all about inflationary pressure, bottlenecks in supply chains. You got the consumer price index data. You got the producers price index data. You got retail sales. We got consumer sentiment, and we got job reports. We are going to know, A, inflationary pressure, how inflationary pressure is impacting our economy and whether it's impacting on economy on a grand scale or not. We'll know whether producers' prices are going higher, whether consumer are paying more for whether it's following through to the consumer or just being stuck at the producer's level. We'll have an indication of the jobless numbers. We'll have import and export prices, which will reflect on the bottlenecks we've been seeing in the supply chain around the world. And we've got retail sales. Retail sales is a big report, folks. Retail sales makes up about 70-75% of our economy. So this reflects on the GDP quite a bit. Keep your eye on this report. And we've got earnings. Now, we're slowly getting into the earnings season. If earnings on tech are better than expected, it may cause a rise in the tech stocks, which will overshadow the current slump we are seeing due to the potential fear that interest rates are going up and earnings on large cap tech cannot sustain themselves and follow through. And we'll also have FOMC minutes, although I don't think the minutes are going to be as important because we had major reports last week and we kind of know where we stand. So I'm not expecting a major surprise. I'm really looking forward to the retail sales report. Do expect volatility, use wider stops. In terms of the overall market, let me just kind of go through the report for you so we can kind of see what's on the table and go from there. Biggest energy shortage, weaker than expected job growth in the U.S. That impacts the bond market. Energy shortage impacts the energy market. Surging demand has collided with supply and shipping constraints. Folks, we've been talking about this for about 6 months. I'm just letting you know about this. Amongst other factors pushing energy prices sharply higher and causing power outages in China and other major economies. The release, that's a major factor. That's one of the major factors right now, energy prices. The release of weaker than expected U.S. employment figures pulled share prices on Wall Street lower Friday. The jobs report showed employers added 194,000 jobs, well short of the 479,000 the economists had anticipated. And the employment rate ticked down to 4.8% from 5.1%. The government revised past month's hiring numbers higher, but last month's hiring was still weaker than since December 2020. This week, attention turns to inflation numbers due out on Wednesday, and that's what we're talking about right here, CPI and the FOMC. So it'll be a very, very interesting week, but again, the focus remains on the energy market and the stock market. Now, what's really interesting is that according to the news reports, the stock market actually went down or was weaker because of the job number. But I'm not seeing it that way. I'm seeing this right here as positive for the stock market because if the numbers are weak, right, then the Fed will continue putting money into the market. And if the Fed keeps putting money into the market, that means higher prices actually. The market actually did not sag much on last week's report, as you could see right here. It's sagging a little bit now, but it was pretty strong. Overall, we remain in the twilight zone, which is the choppy trading action between the 50-day and the 200-day moving average, where there's very little directional bias, but an increase in volatility. We're seeing that in the SPY and the Dow. The price level you want to pay attention to is the 443 level. We want to be above 443. We want the low of the day to be above 443 2 days in a row. And on the Dow Jones, as you can see here, we're still in that level. We kind of went to the 50-day, but then we went back down, and this is still the twilight zone. We want to be above the 350 level 2 days in a row, kind of like this trading action right here, right there. Then we will be bullish again. Until then, we're going to be very, very choppy. And because we're going to be choppy, we want to use wider stop losses, and we don't want to make directional bets too much. Now, in terms of volatility, very, very important. Volatility is barely at 20 right now. Not a really high volatility level, which is telling us that the market will more likely than not go back to its normal level. Put the call ratio, as you will see here, it's at 1. I mean, it's slightly elevated, but again, the trend, as you can see here, has been going down. It hasn't really been going up, right? It's been going down. So volatility is going down, and put the call ratio is going down, and volatility levels are also going down. I mean, volatility is declining. I'll just use a different line. Too complicated. There we go. See, declining. It's going down. So the way I'm looking at things, things are going to get better. Now, in terms of individual sectors, you want to only buy stocks right now in these 4 sectors: energy, financial, technology, and consumer discretionary. You want to sell stocks in consumer staples, industrial, basic materials, and utilities. And honestly, if I were you, I would only stick to consumer staples and utilities. I wouldn't really be focused on industrial and basic materials because these can rally really, really fast, while consumer staples and utilities are more defensive. But as far as going long, you want to stick to consumer discretionary, technology, financial, energy right now. And be careful with energy because the sector is very, very volatile right now. Now, in terms of the best stocks right now, here is my long stock, Alcoa. I like Alcoa. It's hitting the 50-day moving average. It's bouncing off. As long as it stays above the 50-day line, we should be okay. If it breaks below the 50-day line, not so okay. So I do like Alcoa. I'm buying it right here, riding it up to about the 53 level from the 47 level. And if it breaks down into the twilight zone, into the 42 level, you liquidate it. You get out of it. Now, in terms of short trades, I've got some short trades for you. First one, Eagle Miners, gold. Look at that, making new lows. Look at that, new lows, hitting to the 50-day line. I think we're going to come down as soon as the market starts coming back up, the stock market start coming up. So metals on the way down. Silver also, silver miners. Look at that. It doesn't look like we're going to go much higher. I mean, this trend has been down for quite some time. Hey, look at that, right? I don't know why my colored line is the same color as the other one. Let's make it a frisky color. Here we go, green. There we go. See that? Downtrend. So we may go up to the 50-day moving average. You may want to be patient, wait for it to go up to about the 38 level, and then I would sell it all the way down back here. Look at that. Every time it goes high, it comes low. High comes low. And again, it looks like it's going to come up and then come down. So I wouldn't be too bullish on the silver miners right now. A couple of other stocks. Checkpoint Software. A little bearish on the stock. I think it's going to come down again, back down to its base. It's going between 117 and 112. I would be selling it right now and waiting for it to crash back down right here. So Checkpoint, selling it right at the 116 level and covering it right at the 112 level. I think it's going to do pretty good right here for a sell. It hasn't really been going up very much with the market, and it's still below the 200-day moving average. And it looks like the 50-day is about to cross. So if you want to be really patient, wait for the 50-day to cross down. But this thing looks pretty weak, and it looks like it's going to remain quite choppy. So I like this one. and I would sell it and then cover it right at the 112 level. And I think that's about it. So on the sell side, we got AEM, we've got SIL, we got 𝗧𝗶𝗺𝗃, and on the long side, we've got Alcoa. Now, folks, before I go, I've got something really, really important and timely for you. Folks, traders, they're sick. They're sick and tired of looking at stock charts all day just to pick through Wall Street crumbs. They are. With potential Federal Reserve bond tapering, supply chain bottlenecks, persistent COVID-19 disruptions, and October volatility, it's gotten harder to pick winners in the stock market. What if instead of relying on hours of research and trying to decipher the flood of data, traders had a strategy that could identify opportunities for them? Opportunities, I tell you. And this isn't just a place to get trades. Members get multiple strategies, private training materials, exclusive tools to push their trading success into overdrive. Where do I sign up? Click the link below to get this incredible deal. It's available for a limited time only. That's right, it's available for a limited time only. And make sure to like this video, subscribe to this channel if you're watching on YouTube. Stay ahead of the market. Be the first to be notified when I post my next video for you. And tomorrow, we're going to talk about strongest stocks in the strongest sector, weakest stocks in the weakest sector, and maybe if you behave yourself, I'll give you a hot stock, some red meat as well, and an option trade too if you behave yourselves. Folks, let me know if you're getting some value out of these videos. Support at marketgeeks.com. Bye and have a great week. Stay out of trouble. Remember, bonds are closed. We could be in for a little choppiness, and stocks are still in twilight zone. So we're not out of the forest quite yet. Bye, guys. Have a great, great week ahead.